Cracks are finally starting to form in the financial system. As you know, we've had a few banks collapse over here in America in the past week, and this earthquake has sent tsunamis rushing across the pond, and now they're starting to hit Europe. Europe is having a banking crisis as well, and it looks like Credit Suisse is about to go under. And now the Swiss Central Bank has thrown a financial lifeline to Credit Suisse, meaning that they have bailed them out officially. This is more liquidity entering the system, and with Bitcoin being a global phenomenon, this means that there's going to be more money rushing into cryptocurrency. Biden mentioned in his speech yesterday that taxpayers weren't going to be paying to bail out these banks, but I'd beg to differ because, as Mr. Kennedy says over here, there is no such thing as free money.
When I ran for this office in 2016, I observed at that time that one of the problems in America was that we had too many undeserving. I emphasize undeserving because I don't want to paint with too broad of a brush. We had too many undeserving people at the top in America getting bailouts. And we had too many undeserving people at the bottom getting handouts. And the rest of America, most of America in the middle, was getting the bill. And I didn't think that was fair.
It's still happening.
And apparently it's still the case today, Mr. President, and I still don't think it's fair. Now, President Biden chose to bail out 3 of our banks. It was a bailout. You can pretty it up any way you want to. And you can put perfume on a pig, but it still smells like a pig. This was a bailout. It was a bailout for 2 reasons. Number one, except for the people who own the stock in the banks and their unsecured creditors, President Biden and his regulators guaranteed that nobody affiliated with these banks would have any losses. And he said, that's not a bailout because money's not being provided by the American people. It's being provided by all the other banks in America. Well,
who the hell do you think gives the banks that money? It's obviously the depositors.
President, as you know as well as I do, there is no money fair. There isn't anything free. Anything free, somebody had to work for it. By taking the hit, all the banks in America now I'm referring to, banks are taxpayers, that's point one. Point two, but those banks, all the banks in America that are going to have to pay for the president's bailout, they're just going to pass on those costs.
As always, the costs get passed on to the customers, and that's us. That means that you're going to be paying for all of these bailouts that Biden said you're not going to be paying for. Our government just thinks that they can lie to us and that we don't even understand that we're being lied to.
Including but not limited to their depositors. And last time I checked, most depositors in banks in America were taxpayers as well.
As we know from our experience with the FTX debacle and all of the other collapses that we've seen in the crypto space, there is no bailouts in cryptocurrencies, and anybody who has been responsible with their money is going to be seeing their money still being left where they left it. As long as you keep your money in a cold storage wallet and not on a centralized exchange, whenever other people are irresponsible with their cryptocurrency or their money, then you shouldn't have to bear the brunt of the cost. There is no central bank in cryptocurrency, and there's no way for anybody to print a bunch more bitcoins to bail out somebody like Sam Bankman-Fried. If the government was in control of cryptocurrency, then they would have undoubtedly bailed out Sam Bankman-Fried and FTX, because he was one of the biggest donors to definitely the Democratic Party, but according to him, also the Republican Party. This is what has always happened in the traditional finance space. It's always people that have too much money that's other people's money, and they go and buy influence so that they can get around the regulations and do whatever they want to get rich. Well, cryptocurrency is a way for us to opt out of that situation, and that's why it's been pumping over the past week or so. And as the U.S. bank collapses start to have an effect rippling over to the Credit Suisse bank, as you can see, they are also having issues in the rest of their banks in Europe. Speculators have built a $16 billion bearish bet on Europe's banks, and I don't know if any of the bulls have $16 billion to put down against that bet. Right here we have the heat map for the U.S. finance industry, and as you can see, it's pretty much red across the whole board. But as I said in the beginning of this video, this earthquake has sent shockwaves across the pond, and here you can see the European finance heat map, and it's even more deep red than it is over here in America. So as these dominoes fall and they cascade across the global banking system, it looks like we're probably going to be seeing more bank collapses, and if we see something like Credit Suisse collapsing, then that means it's probably going to be more shockwaves headed back our direction over here in America. So in my opinion, the Fed is probably going to have to be doing an about face here pretty soon. And it's not just me. It looks like the CME futures are starting to catch up to this opinion as well. Earlier today, the probability was actually higher that we were going to be seeing a pause at about 59%, but it looks like it has cooled off a bit right now with it sitting at about 45%. And I think this data might be a little bit flawed, or it just needs to catch up, because as you can see, it does show a 53% chance of in the next meeting them doing a 50 basis point hike, which doesn't really make much sense to me if they're going to stay at this slow pace of 25 basis point hikes and then start to raise the interest rate hikes as we're seeing this banking crisis. Also, in the very next meeting, if that actually does play out, then it looks like there's a 48% chance of them doing a 50 basis point rate cut. And I just think that it would make more sense for them to either maybe even do a 25 basis point hike because they said they were basically going to up until this point, or to do a pause right now and kind of let these interest rate hikes catch up to the economy before they actually do have to cut rates, which I could see them doing in June because we are reaching the debt ceiling and it looks like they're going to have to raise it by July. Like I keep saying, there's no way that the Fed is going to be able to quit printing because the debt ceiling has to be raised and the government is not going to quit spending. Also, with the economy totally collapsing, they're not going to be able to raise taxes to a meaningful degree, and there's just no way that they can support all of the spending that they're going to do without the Fed printing a bunch more money. And with CPI coming in cooler month over month at 0.4%, and PPI slowing down, coming in way lower than expected at negative 0.1%, with a forecast of 0.3% and last month's being 0.3% as well. I think all of these data points are going to be leading the Fed to do a pause in their meeting here in the next week or so, and if they don't, then they're probably going to be doing a 25 basis point hike before actually doing a pause, and then we might be seeing them cut by the end of the year, which is definitely different than what they were saying in their last meeting because they said they weren't expecting to do a rate cut at all this year. So as these things continue to be priced into the market and we see all of these bank crises across the whole globe, I think there's going to be a lot more people waking up to Bitcoin and cryptocurrencies because they are a way for us to opt out of the traditional financial system and avoid paying for all of these mismanagements of funds that all of these bankers have been doing, putting us all in jeopardy. Right now, over the past day or so, we have been seeing a bit of a cool off here for Bitcoin, but on the 4-hourly chart, it looks like it is putting in a hammer candle here at the bottom of this 0.382 Fibonacci retracement level, and hopefully this will be a significant level of support that will send us back to the upside whenever we do see Credit Suisse collapsing finally, and people start to realize that the governments around the world are going to have to continue printing money, which could come as soon as tomorrow. So let me know what you guys think in the comments. Are we going to continue to see Bitcoin going to the upside, or is it going to be feeding off of the fear from the rest of the market and making another leg lower? Either way, thank you guys so much for watching. I hope you have a wonderful day, and I'll see you guys next time. Bye. This is Abisu. He's named after one of the 7 lucky gods of Japan. According to legend, he will bring wealth and prosperity to anybody who evokes his name. So don't forget to write his name in the comments or you'll bring dishonor to your whole portfolio. And check out this video right here. Say goodbye, Abisu.